The Valkyrie Bitcoin Miners ETF, ticker WGMI, is designed to give investors exposure to the Bitcoin mining industry without owning Bitcoin itself. Instead of holding physical Bitcoin or Bitcoin futures, this ETF invests in publicly traded companies that operate within the Bitcoin mining ecosystem. That makes WGMI a way to access the infrastructure and businesses behind Bitcoin mining through a traditional equity ETF structure. WGMI is an actively managed fund that focuses on companies deriving at least 50% of their revenue from Bitcoin mining operations or from providing services directly tied to mining. This includes companies that mine Bitcoin as their primary business, as well as firms that manufacture specialized chips, hardware, software, and other tools essential to the mining process. The idea is to concentrate the portfolio on businesses that are economically tied to the growth and operation of the Bitcoin network, rather than companies with only minor or incidental exposure. One of the most important things to understand about WGMI is what it does not do. The fund does not invest directly or indirectly in physical Bitcoin, and it does not hold Bitcoin futures contracts. All exposure comes through equity securities. The fund holds common stocks and ADRs listed on global exchanges, and those securities can be denominated in U.S. dollars or foreign currencies. That means investors are exposed to stock market dynamics and company fundamentals, not to direct cryptocurrency ownership or custody risks. The fund's active management plays a central role in how WGMI is constructed. Rather than tracking a fixed index, the advisor evaluates companies individually and selects those they believe are best positioned to succeed within the Bitcoin mining industry. This approach allows the fund to focus on business quality, operational efficiency, balance sheet strength, and long-term competitive positioning. It also allows the portfolio to evolve as the industry changes, rather than being locked into a static rules-based structure. WGMI's portfolio typically includes a mix of Bitcoin mining operators and companies that supply the mining industry. Mining companies earn revenue by validating transactions and securing the Bitcoin network, while equipment and technology providers earn revenue by selling chips, hardware, and software used in mining operations. By combining both types of companies, the fund aims to capture a broader slice of the mining ecosystem rather than relying on a single business model. Another defining feature of WGMI is its emphasis on environmental, social, and governance considerations. Bitcoin mining has drawn criticism for its energy consumption, and WGMI attempts to address that concern by favoring companies with more sustainable practices. The advisor incorporates ESG analysis into the selection process and tilts the portfolio toward miners that rely heavily on renewable energy sources. A significant portion of the fund's assets are invested in companies that use renewable power, such as hydro, solar, wind, or other low-emission energy sources in their mining operations. This ESG focus is not just about optics. Energy costs are one of the largest expenses for Bitcoin miners, and access to low-cost renewable energy can be a competitive advantage. By emphasizing sustainability, WGMI aims to invest in companies that may have more resilient and efficient business models over time. This approach differentiates the fund from more passive strategies that simply hold mining companies based on market capitalization, without regard to energy usage or environmental impact. Because WGMI is actively managed, it differs meaningfully from passive crypto equity or blockchain ETFs. Active management allows the advisor to adjust holdings, position sizes, and exposure based on their assessment of company fundamentals and industry conditions. It also allows the fund to avoid companies that no longer meet its criteria or that face operational, regulatory, or governance challenges. This flexibility can be particularly important in a rapidly evolving and volatile industry like Bitcoin mining. It's also important to understand the risks involved. WGMI is an equity ETF, but it operates in a highly specialized and volatile segment of the market. The companies it holds can experience large price swings based on changes in operating costs, regulatory developments, technological shifts, and competitive pressures. While the fund's diversification across multiple companies can reduce single-stock risk, it does not eliminate industry-specific risk. The fund's name has changed over time, but its core strategy has remained consistent. Prior to October 31st, 2024, the fund was known as the CoinShares Valkyrie Bitcoin Miners ETF, reflecting its management and ownership structure at the time. Following an acquisition, CoinShares was incorporated into the fund's name, but the investment approach, ticker symbol, and underlying strategy did not materially change. The ETF continues to operate with the same focus on Bitcoin mining equities and infrastructure companies. In summary, WGMI is designed for investors who want exposure to the Bitcoin mining industry through publicly traded companies rather than direct cryptocurrency ownership. It offers a targeted, actively managed approach that emphasizes business fundamentals, infrastructure exposure, and sustainability considerations. While it does not remove volatility or risk, it provides a structured way to participate in the Bitcoin mining ecosystem using a traditional ETF vehicle. For investors evaluating thematic ETFs, WGMI serves as an example of how active management, ESG considerations, and industry specialization can be combined into a single product. Understanding how the fund works, what it holds, and what risks it carries is essential before deciding whether it fits within a broader portfolio strategy.